They denied the loan application of the man who literally owned the bank they worked for, not knowing their risky borrower controlled their paychecks, their careers, and the entire financial institution they were trying to exclude him from. What started as a simple home improvement loan request turned into the most shocking case of banking discrimination in American history, where loan officers questioned his financial literacy, risk managers accused him of fraud, and a branch manager suggested he apply for minority assistance programs instead. But when Robert Sterling revealed his true identity as the largest shareholder and board member, the tables turned so dramatically that it sparked a revolution across the entire financial industry. This is the incredible true story of how one moment of systematic prejudice became the catalyst for transforming American banking forever, proving that sometimes the person you judge by their appearance owns the very system you're trying to deny them access to. The revelation will leave you speechless. The justice will restore your faith in accountability, and the transformation that follows will show you what's possible when financial power meets moral courage. Stay until the end, because what happens next doesn't just change careers, it changes how an entire industry thinks about equality and opportunity.
They denied the loan application of the man who literally owned the bank they worked for, not knowing their risky borrower controlled their paychecks, their careers, and their entire financial future. What happened next exposed the most shocking case of banking discrimination in American history, but the ending will prove that sometimes the person you underestimate holds the power to transform an entire industry. This is the incredible true story of Robert Sterling, and what you're about to witness will change how you think about financial prejudice, hidden power, and the devastating cost of judging people by their appearance. Picture a 48-year-old black man walking through the polished marble entrance of Metropolitan Trust Bank in downtown Chicago. He's wearing simple khakis, a plain polo shirt, and carrying a basic leather folder that's seen better days. To anyone watching, he looks like an ordinary customer, perhaps a small business owner or working professional seeking a modest loan. But here's what nobody in that gleaming banking hall could possibly imagine. This unassuming man owns 34% of every dollar that flows through the institution, controls more wealth than most small countries, and holds the financial futures of everyone in the building in his hands. Robert Sterling is the founder and CEO of Sterling Investment Group, a private equity firm that manages over $8 billion in assets across real estate, technology, and financial services. His personal net worth exceeds $2 billion, making him one of the wealthiest Black Americans in history. But Robert's journey to the pinnacle of American finance began in the most humble way possible, with a $500 savings account and an unshakable belief that intelligence and determination could overcome any obstacle. 25 years ago, Robert was a recent college graduate working as a bank teller in Detroit, watching wealthy customers conduct transactions that represented more money than his family had ever seen. While his coworkers saw routine banking, Robert saw patterns, opportunities, and the mathematical relationships that drive financial markets. He spent his lunch break studying investment strategies, his evenings learning about corporate finance, and his weekends analyzing market data that most people found incomprehensible. Robert's breakthrough came when he identified an undervalued real estate investment trust that every major firm had overlooked. Using his entire savings plus a small loan, he purchased shares that doubled in value within 6 months. Instead of celebrating, Robert reinvested everything and repeated the process, then again and again. Each success provided capital for larger investments, each victory built credibility with bigger players, and each achievement opened doors that had previously been closed to someone who looked like him.
The turning point arrived when Robert's investment strategy caught the attention of institutional investors who recognized his exceptional talent. Rather than joining an existing firm, Robert made a decision that would change everything. He would build his own company and prove that a black man from Detroit could compete with the most prestigious names on Wall Street. Sterling Investment Group started in a rented office, with Robert as the only employee. Today, the firm manages investments for pension funds, university endowments, and sovereign wealth funds around the world. Robert's innovative approach to risk management and market analysis has generated returns that consistently outperform industry benchmarks, earning him respect from competitors and clients alike. But success in finance brought an unexpected responsibility. As Robert's wealth grew, he began investing in the very institutions that had once seemed unreachable. His largest single investment was a 34% stake in Metropolitan Trust Bank, the same institution where he now served on the board of directors and influenced lending policies that affected thousands of families. Recently, Robert had been receiving disturbing reports about discriminatory lending practices at Metropolitan Trust. Anonymous complaints suggested that minority applicants were being systematically denied loans despite meeting all qualification requirements. The reports described a culture where assumptions about creditworthiness were being made based on race rather than financial reality. So today, Robert Sterling was conducting the most important test of his career. Dressed like any other customer and carrying only standard identification, he was about to apply for a simple $250,000 home improvement loan to see firsthand whether the bank he largely owned was practicing the kind of discrimination that had once excluded people like him from financial opportunity. If you believe that everyone deserves to be judged by their financial qualifications rather than their appearance, smash that like button right now. Comment below with the word equality if you think banking should be based on merit, not prejudice. And subscribe, because what Robert discovers about his own bank will absolutely shock you and restore your faith in the power of justice.
Right at that moment, as Robert approached the loan department of his own bank, the very discrimination he'd hoped to expose was about to reveal itself in the most devastating way possible. What happened in the next few minutes would prove that the prejudicial lending practices he'd been hearing about weren't just isolated incidents. They were a systematic poison that had infected the institution he'd invested hundreds of millions of dollars to support. The first person to notice Robert was Patricia Williams, a loan officer who'd been working at Metropolitan Trust for 4 years. Patricia's reaction was immediate and telling. Instead of the professional welcome that every potential customer deserved, her eyes quickly assessed Robert's casual appearance with barely concealed judgment. You could see the assumptions forming in her mind, the way she straightened in her chair, the subtle shift in her expression, the unmistakable body language of someone who had already decided this black man in khakis probably couldn't afford whatever he was about to request. "Good morning," Patricia said, her tone carrying the kind of forced politeness that service workers use when they're trying to sound helpful while being condescending. "How can I help you today?" But her voice carried an undertone that suggested she was already preparing to explain why whatever Robert wanted probably wasn't going to be possible. Robert felt that familiar knot form in his stomach. The same feeling he'd experienced decades earlier when he was just starting his career and facing constant assumptions about his capabilities. But this time was different. This time, he wasn't a powerless young man hoping for a chance. He was the largest individual shareholder of the entire institution. Still, he needed to see how deep this discrimination ran before revealing his identity. "I'd like to apply for a home improvement loan," Robert said calmly, his voice professional and confident. "I'm looking at around $250,000 for renovations on my property." His request was straightforward, reasonable, and well within the range of loans the bank approved dozens of times every week. Patricia's eyebrows shot up in what could only be described as surprise mixed with skepticism. She actually let out a small laugh, the kind of nervous chuckle people make when they think someone is being unrealistic about their own financial situation. "Well, that's quite a substantial amount," she said, emphasizing the word substantial as if Robert might not understand what a large number meant.
Our home improvement loans typically range from $10,000 to $50,000. Perhaps you should consider starting with something more manageable."
The condescension in Patricia's suggestion was unmistakable. She wasn't questioning Robert's creditworthiness based on any financial information. She was making assumptions based purely on his appearance and her own prejudicial beliefs about who deserved access to significant borrowing power. But the real gut punch came when David Chen, a credit specialist, joined the conversation after overhearing Patricia's comments. "Sir," David said, his tone suggesting he was about to deliver helpful advice to someone who clearly didn't understand banking, "I think there might be some confusion about how lending works. A $250,000 loan requires substantial collateral, perfect credit history, and documented income that can support those payments. Perhaps you should consider building your credit profile with a secured credit card first." The assumption underlying David's comment was devastating. He was essentially telling a billionaire to start with a beginner's credit card, suggesting that Robert was financially illiterate and had somehow wandered into a situation beyond his comprehension. David genuinely believed he was being helpful by steering this black customer toward more appropriate financial products. What made the situation even more heartbreaking was the casual nature of their discrimination. Patricia and David weren't angry or hostile. They were exhibiting the kind of routine, everyday financial prejudice that had become so normalized they didn't even recognize it as wrong. They genuinely believed they were protecting the bank from a risky borrower while helping Robert understand his realistic options. As Robert stood there listening to employees of his own bank treat him like a financial amateur, he realized that the reports he'd been receiving were just the tip of the iceberg. The discrimination wasn't hidden behind complex policies or subtle language. It was blatant, systematic, and apparently completely acceptable to the people who were supposed to be implementing the bank's lending standards. The investigation was just beginning, and what Robert was about to discover would reveal the true depth of financial prejudice in American banking. But the nightmare was just beginning, because what Robert discovered next revealed a level of systematic financial discrimination that would make your blood boil. This wasn't just two prejudiced employees having a bad day. This was an entire culture of banking bias that had poisoned his institution from the inside, and every person who got involved made the discrimination exponentially worse. The conversation with Patricia and David had apparently triggered some kind of internal alert system, because suddenly it seemed like every loan department supervisor had found a reason to observe Robert's application process. What Robert witnessed next was a masterclass in how financial discrimination operates, not through dramatic confrontations, but through the coordinated assumptions of multiple professionals who shared the same devastating prejudices about creditworthiness and race. Margaret Thompson, the senior loan officer, was the next to join the growing crowd around Robert's application. Margaret was a 52-year-old white woman who'd been with Metropolitan Trust for over a decade, someone who should have understood federal fair lending laws and basic professional standards. But the moment Margaret reviewed Robert's loan request, her reaction revealed the depth of bias that had become normalized in the banking culture. "Mr. Sterling," Margaret said, reading from his application with obvious skepticism, "I see you're requesting $250,000, but I have to be honest with you. This seems quite ambitious given your profile." She paused, letting her eyes scan Robert from head to toe in the most insulting way possible. "Our lending standards require extensive documentation, and frankly, claims about high income and significant assets need to be thoroughly verified. We've seen too many applications that look impressive on paper but don't hold up under scrutiny." The implication was clear. Margaret was suggesting that Robert's financial information was potentially fraudulent, that his assets might not be real, and that his income claims were probably exaggerated. She wasn't questioning specific numbers or requesting additional documentation. She was questioning his fundamental honesty based on nothing more than his appearance. Within minutes, the situation escalated when James Rodriguez, a risk management specialist, appeared with Robert's preliminary credit report. James's reaction to the information should have been celebration. Robert's credit score was perfect, his payment history was flawless, and his assets far exceeded anything required for the loan. Instead, James looked confused and suspicious. "This is unusual," James announced, loud enough for other customers to hear. "The credit report shows significant assets and perfect payment history, but these numbers seem inconsistent with—" He gestured vaguely at Robert, clearly unable to finish the sentence that would have revealed his racist assumptions. "We'll need to run additional verification to confirm that this information is accurate."
The most devastating moment came when Robert observed how other customers were being treated just feet away from his own application process. A well-dressed white couple had arrived after Robert and was already being walked through loan approval options by a different officer. Their loan request was for $300,000, $50,000 more than Robert's, but they were being offered champagne and congratulations rather than suspicion and verification demands. The contrast in treatment was so stark it would have been comical if it weren't so heartbreaking. The white couple's financial information was being accepted at face value. Their creditworthiness was being assumed rather than questioned, and their loan process was moving forward smoothly, while Robert was being subjected to additional scrutiny for reasons that had nothing to do with his qualifications. But the systematic nature of the discrimination became undeniable when Robert overheard Margaret speaking to Patricia in what she thought was a private conversation. "We need to be extra careful with applications like this," Margaret whispered. "Sometimes these look good on paper, but there are usually red flags if you dig deeper. People in his demographic often have inflated income claims or unrealistic expectations about loan approval." The phrase, "his demographic," hit Robert like a physical blow. Margaret was openly admitting that loan decisions were being influenced by racial assumptions rather than financial facts. She was suggesting that black applicants were inherently less trustworthy, more likely to provide false information, and needed additional scrutiny that white customers didn't face. As Robert stood there watching employees of his own bank systematically question his qualifications while fast-tracking identical applications from white customers, he realized that the discrimination wasn't subtle or hidden. It was blatant, routine, and completely integrated into the bank's daily operations. The institution he'd invested in to create financial opportunities for underserved communities had become a place where people like him faced systematic exclusion from those same opportunities. The evidence was mounting, the patterns were undeniable, and Robert Sterling was about to discover just how deep the financial prejudice ran in his own bank.
No one expected what happened next, because the financial discrimination was about to cross every line of professional conduct and push Robert to the absolute breaking point. What these banking professionals said and did in the following moments was so shocking, so completely unacceptable, that it would expose the ugliest truth about systematic prejudice in American financial institutions. Margaret Thompson, the senior loan officer who had been questioning Robert's financial legitimacy, was clearly frustrated that her intimidation tactics weren't working. Robert's calm professionalism and perfect credit profile were forcing her to reveal her true motivations, and what came out was more horrifying than anyone could have imagined. "Mr. Sterling," Margaret said, her voice taking on the authoritative tone of someone who believed she was about to deliver a reality check, "I'm going to be frank with you. We have to be realistic about lending to your demographic. Our risk models show higher default rates in certain communities, and we simply cannot ignore those statistical realities when making lending decisions." Her words were a textbook example of illegal redlining, openly admitting that loan decisions were being made based on racial assumptions rather than individual qualifications. But James Rodriguez, the risk management specialist, took the discrimination to an even more devastating level.
"Sir," James said, reviewing Robert's application with obvious disdain, "these asset claims and income figures look suspicious to me. The documentation appears legitimate on the surface, but we've seen sophisticated attempts at fraud before. I'm recommending that we flag this application for potential investigation by our security department." The accusation that Robert was potentially committing fraud was particularly devastating, given that every piece of information in his application was not only accurate, but actually understated his true financial position. James was essentially calling a billionaire a liar based on nothing more than his own prejudicial assumptions about black customers. The breaking point came when Richard Hayes, the branch manager, made his final appearance. Richard was a 58-year-old man who'd been running this location for 7 years, someone who should have understood federal banking regulations and civil rights law. Instead, his decision revealed the depth of institutional racism that had infected the bank's leadership. After careful review, Richard announced with the confidence of someone who believed he was making a sound business decision, "We're going to have to deny your loan application. While your paperwork appears to be in order, we have concerns about the legitimacy of the claimed assets and income levels. Additionally, the requested loan amount exceeds what we consider appropriate for someone in your situation."
The formal denial was crushing, but Richard wasn't finished destroying his own career. "I'd suggest you consider applying for one of our urban development microloans or small business programs designed for minority entrepreneurs. Those programs have more flexible requirements and might be better suited to your actual financial circumstances." The condescending suggestion that Robert should apply for minority programs because he couldn't qualify for regular banking services was the ultimate insult. Richard was essentially telling a man who owned more bank stock than most institutional investors to settle for charity programs designed for people with limited resources. But the most soul-crushing moment came when Security Officer Michael Davis approached Robert's table with obvious suspicion. "Sir," Michael said, his hand resting on his radio, "we've received reports about potential fraudulent documentation being presented for loan applications. I'm going to need to ask you some questions about the information you've provided to our lending team." The transformation was complete. In the span of 1 hour, Robert had gone from being a loan applicant to being treated as a potential criminal. The bank he largely owned was now treating him as a security threat simply because his financial success didn't match their racist expectations about what a wealthy black man should look like. What made the moment even heartbreaking was the reaction from other customers in the banking hall. Instead of being horrified by the obvious discrimination they were witnessing, several white customers were nodding approvingly. One elderly man actually commented to his companion, "Good to see them taking fraud seriously. Too many people trying to game the system these days." The casual support for Robert's humiliation revealed the depth of the toxic culture that had infected not just the bank's employees, but the broader community they served. The assumption that a black man with significant assets must be running some kind of scam was so ingrained that customers felt comfortable expressing their approval of his mistreatment. As Robert sat there, surrounded by banking professionals who had just denied him a loan he could have paid for in cash, he realized that everything he'd worked to build, everything he'd invested to create opportunities for others, had been poisoned by the exact same financial discrimination he'd spent his career trying to overcome. But what these prejudiced bankers didn't know was that the man they were humiliating controlled their institution, their careers, and their financial futures. And justice was about to be served in the most spectacular way possible. If this level of banking discrimination makes you furious, smash that like button to show your support for financial equality. Comment below with "fair lending" if you believe loan decisions should be based on creditworthiness, not skin color.
and subscribe because what Robert reveals next will leave these racist bankers speechless and change American banking forever.
Right at that moment, as Security Officer Michael Davis prepared to investigate Robert for potential fraud, and the other customers nodded their approval of his mistreatment, Robert Sterling was about to deliver the most devastating financial reality check in banking history. What happened next was so shocking, so completely earth-shattering, that every single person who had participated in this disgusting display of discrimination would remember this moment as the day their world came crashing down around them. Robert reached into his leather folder with the calm precision of a man who had been preparing for this moment for months. The first thing he pulled out wasn't what anyone expected. It was an official shareholder certificate, printed on heavy bond paper with embossed gold lettering, the kind of document that represented serious institutional ownership rather than casual investment. The certificate gleamed under the bank's elegant lighting, immediately catching the attention of everyone who had been busy denying his loan application just moments before. "Before you continue with your fraud investigation," Robert said, his voice still impossibly calm despite everything he had just endured, "I think there's something you need to understand about exactly who you're dealing with." He placed the shareholder certificate on Margaret's desk, where everyone could read the stunning details. Robert Sterling, individual shareholder, Metropolitan Trust Bank, 34.7% ownership stake. Current market value, $847 million. Margaret Thompson, the senior loan officer who had just explained how people in Robert's demographic were higher-risk borrowers, was the first to read the certificate. Her face went through a series of expressions that would have been comical if the situation weren't so serious: confusion, disbelief, recognition, and finally, absolute horror. "That's impossible," she stammered, her voice barely above a whisper. "The largest individual shareholder he's on the board of directors. He doesn't look like—" The sentence died in Margaret's throat as the catastrophic realization began to dawn on her. She had never actually met the mysterious Robert Sterling who appeared in their corporate communications and board reports. All her knowledge came from quarterly statements, annual reports, and carefully edited corporate presentations, where he appeared in expensive suits surrounded by other financial executives. Margaret had formed her own mental image of what a billionaire bank owner should look like, and it didn't match the man in khakis standing in front of her. But Robert wasn't finished. This wasn't just about showing them a piece of paper. It was about providing undeniable, overwhelming proof that would make their discrimination impossible to deny or excuse. He walked calmly to the executive access terminal located near the branch manager's office, a computer system that only board members and senior executives could use. Without saying a word, Robert placed his thumb on the biometric scanner. The machine processed for several seconds, then displayed a green verification screen along with a message that appeared in large clear text. "Welcome, Mr. Sterling. Board member access granted. Current session ownership verification protocol activated." The terminal unlocked with a series of electronic chimes that echoed through the suddenly silent banking hall like funeral bells for everyone who had participated in his humiliation. The silence that followed was deafening. Richard Hayes, the branch manager who had just denied Robert's loan application and suggested he apply for minority assistance programs, actually had to grab onto his desk to keep from falling. His face had gone completely white, and his hands were visibly shaking as the magnitude of what he had just done began to sink in. But Robert still wasn't done. He began accessing real-time banking data that only ownership-level executives could view: deposit flows, loan portfolios, profit margins, and performance metrics that painted a picture of the institution's complete financial operation.
The large monitor visible throughout the banking floor lit up with numbers that represented Robert's personal wealth flowing through the bank's systems.
"This institution," Robert said, his voice carrying clearly through the stunned silence, "processed $4.2 billion in transactions last quarter. I know this because 35% of the profits from every transaction, every loan, and every service fee flows directly into my personal investment accounts." He turned to face Richard Hayes, whose confident discrimination had evaporated into panic-stricken terror. "I didn't buy this ownership stake through inheritance or family money. I earned it through 25 years of building one of the most successful investment firms in American history." But the most devastating proof was yet to come. Robert pulled out his personal cell phone and speed-dialed a number that connected him directly to the bank's chief executive officer, Catherine Morrison. The call went through immediately. No waiting, no assistance, no screening. Just a direct line to the most powerful person in the institution. "Catherine," Robert said, putting the call on speaker so everyone in the banking hall could hear, "I'm standing in our downtown branch conducting an ownership inspection. Could you please confirm my identity and authority for the staff here?" Catherine's voice came through crystal clear, professional and respectful. "Of course, Mr. Sterling. You're our largest individual shareholder and a member of our board of directors. Your investment in Metropolitan Trust has been instrumental in our growth and success. Is there anything specific you need from the branch team?" The confirmation hit the banking floor like a financial nuclear bomb. Patricia Williams, who had suggested Robert should start with a secured credit card, looked like she was about to be sick. David Chen, who had questioned Robert's financial literacy, suddenly found something very interesting to stare at on his computer screen. James Rodriguez, who had accused Robert of potential fraud, appeared to be having trouble breathing. But Robert had one final crushing piece of evidence to present. He walked to the main display area where the bank's corporate information was posted for customers. Right in the center was a framed photograph from the previous year's annual shareholders meeting. In the photo, Robert Sterling stood at a podium delivering the keynote address to hundreds of institutional investors, board members, and financial industry leaders. He was wearing a suit in that photograph, but his face was unmistakable. "That's me," Robert said, simply, pointing to the photograph. "Last year's shareholders meeting, where I presented our diversity and inclusion initiatives designed to ensure that all customers receive equal treatment regardless of their background." His voice carried a weight of disappointment that was more powerful than any shouting could have been. "The meeting where I specifically discussed eliminating discriminatory lending practices and creating equal access to financial services." The revelation was complete. The evidence was overwhelming. Every person who had denied Robert's loan application, questioned his honesty, and suggested he apply for minority assistance programs now faced the terrifying realization that they had just committed career suicide in the most public and humiliating way possible. The man they had treated as a potential fraud was not only their largest shareholder, he was the person who controlled their salaries, their benefits, their professional futures, and the very existence of their jobs. They had denied a loan to the person who literally owned the money they were supposed to be lending. Margaret Thompson, who explained how statistical realities justified discriminating against Robert's demographic, was now staring at her own termination, and she knew it.
But what happened next was even more devastating than the revelation itself, because the full weight of their discriminatory actions was about to crush every single person who had participated in this systematic financial prejudice. The moment of reckoning had arrived, and it was going to be more brutal than anything they could have possibly imagined. Richard Hayes, the branch manager who had confidently denied Robert's loan application and suggested he apply for minority assistance programs, was the first to attempt damage control. His face had transformed from arrogant authority to pure terror, and sweat was now streaming down his forehead despite the bank's perfectly controlled climate.
"Mr. Sterling," he stammered, his voice shaking so badly he could barely form coherent words. "I had absolutely no idea who you were. This is all just a terrible misunderstanding. We were following standard risk assessment protocols." But Robert cut him off with a look that could have frozen the bank's vault. "A misunderstanding?" Robert repeated, his voice still calm, but now carrying an edge of steel that made everyone within earshot flinch. "Richard, you told me that people in my demographic are statistically higher risk. You denied my loan application despite perfect credit and massive assets. You suggested I apply for minority programs because my actual financial circumstances didn't merit regular banking services. Which part of that was a misunderstanding?" The use of Richard's first name hit like a financial sledgehammer. It reminded everyone present that this wasn't some random inspection. Robert knew who they were, he had access to their employment records, and he controlled their professional destinies. Margaret Thompson, the senior loan officer, who had openly admitted to using racial demographics in lending decisions, tried a different approach that was somehow even worse than Richard's excuses. "Sir, I'm deeply sorry, but you have to understand the pressure we're under to manage risk and prevent fraud. When we see applications that seem inconsistent with expectations, we have to investigate thoroughly. This wasn't personal, it was just standard banking procedure." "Standard banking procedure?" Robert asked, his eyebrows raised in disbelief. "Margaret, you told me that statistical realities about my demographic justified additional scrutiny. You questioned the legitimacy of assets that are publicly documented in SEC filings. You assumed I was committing fraud because my financial success didn't match your racist expectations. Do you understand what you just admitted to?" The question hung in the air like a sword over Margaret's career. She had just confessed to illegal discriminatory lending practices on bank property in front of witnesses to the owner of the institution. But Robert wasn't finished exposing the scope of their discrimination. He pulled out a tablet and began accessing detailed banking records in real time. "Let me share some fascinating statistics with everyone," Robert said, his voice carrying throughout the banking hall. "In the past 12 months, this branch has approved 93% of loan applications from white customers with credit scores above 750. For black customers with identical credit profiles, the approval rate is 62%. The numbers hit the banking staff like a financial tsunami. They had assumed their bias was subtle, undetectable, or at least undocumented. The revelation that their discriminatory practices were mathematically provable meant their careers weren't just over. They were facing potential federal civil rights violations.
James Rodriguez, who had accused Robert of sophisticated fraud, made one last desperate attempt to save himself. "Mr. Sterling, I think there's been a serious communication breakdown here. We weren't targeting anyone based on race. We were applying consistent risk management standards to ensure the bank's financial stability. These decisions were based on objective criteria, not personal bias." Robert's response was devastating in its precision. "James, you called my documented assets suspicious and recommended a fraud investigation. Identical asset documentation from white customers this morning was approved without question. You suggested that people in my demographic often provide inflated income claims. Those weren't objective criteria. Those were racist assumptions about my character and honesty." The systematic nature of their discrimination was becoming undeniable with each revelation. This wasn't about individual mistakes or communication problems. It was about a coordinated culture of financial racism that had infected every level of the banking operation. Patricia Williams, who had suggested Robert should consider a smaller, more manageable loan amount, made the most tone-deaf comment of all. "Mr. Sterling, I think we can all agree that this situation escalated beyond what anyone intended. These are good employees who were just trying to protect the bank's interests. Maybe we can find a way to resolve this without anyone losing their jobs or facing disciplinary action. The audacity of asking the victim of discrimination to protect the careers of his harassers was breathtaking. Patricia was essentially suggesting that Robert should prioritize the employment of people who had just systematically denied him financial services over justice and accountability. But the most pathetic response came from Michael Davis, the security officer who had been preparing to investigate Robert for fraud. "Sir, I was just following standard security protocols," Michael said, his voice trembling with panic. "When the loan department reports suspicious documentation, I'm required to investigate. This isn't about race, it's about protecting the bank from financial crimes." That excuse was so outrageous that several minority customers who had been watching the situation actually shook their heads in disgust. They knew exactly what Michael meant by suspicious, and it had nothing to do with legitimate security concerns. Robert's response was swift and final. "Michael, you were called to investigate me for fraud because my financial success didn't match the staff's racist expectations. White customers with identical documentation weren't flagged as suspicious. You were about to treat the largest shareholder of this bank as a criminal based solely on discriminatory assumptions from your colleagues." But Robert wasn't just interested in exposing individual racism. He was revealing institutional patterns. "This branch," Robert announced, accessing more detailed records, "has called security to investigate potential fraud by minority customers 47 times in the past year. Security investigations of white customers for similar concerns 3 times. The evidence was overwhelming and undeniable. Every person involved in Robert's humiliation now faced the terrifying realization that their careers, their reputations, and their futures had just been destroyed by their own discriminatory actions. "Your lending practices," Robert said with the finality of a judge delivering a verdict, "constitute systematic violation of federal fair lending laws. Your treatment of minority customers represents illegal discrimination that will be reported to banking regulators and civil rights authorities." The accountability phase was complete, and everyone involved knew that the consequences were going to be swift, severe, and permanent.
Right at that moment, with the discriminatory employees facing the complete destruction of their careers, Robert Sterling was about to demonstrate that true leadership isn't just about delivering justice, it's about transforming entire systems to ensure that what happened today could never happen again. What he announced next would not only change the lives of everyone in that banking hall, but would revolutionize how American financial institutions approach equality and fair lending. Robert walked to the bank's main announcement system and activated the branch-wide intercom, his voice now carrying to every corner of the elegant financial institution. "Attention, all Metropolitan Trust Bank employees. This is Robert Sterling, your largest shareholder and board member. All banking operations will cease immediately for a mandatory all-staff meeting. Every loan officer, teller, manager, and administrator is required to report to the main banking hall within the next 10 minutes. The announcement sent shockwaves throughout the entire branch. In the bank's history, operations had never been halted for an unscheduled meeting. The financial cost of stopping all transactions was enormous, but Robert was about to prove that some things were more important than short-term profits. As employees began gathering in the main banking area, Robert turned his attention to the management team that had just systematically discriminated against him. His first announcement was swift and devastating. "Richard Hayes, your employment with Metropolitan Trust Bank is terminated immediately for violation of federal fair lending laws, bank policy, and basic professional ethics. Security will escort you from the premises within the next 15 minutes, and your termination will be reported to banking regulators as required by law." Richard's legs actually buckled at the news.
In the span of 2 hours, he had gone from confidently running a major bank branch to being unemployed with a federal civil rights violation on his record that would follow him for the rest of his career. "Margaret Thompson," Robert continued, "your employment is also terminated effective immediately. Your admission that you make lending decisions based on racial demographics is not only illegal, but represents everything this institution was founded to oppose. You will be escorted out with Mr. Hayes." Margaret, who had been so confident in her discriminatory risk assessments just hours earlier, was now visibly shaking. The woman who had explained how statistical realities justified treating black customers differently was about to learn what real consequences looked like. "James Rodriguez and Patricia Williams, you are both suspended without pay pending a comprehensive investigation into your discriminatory practices. If the investigation confirms what I witnessed today, you will join your colleagues in permanent unemployment." But Robert wasn't just interested in punishment. He was focused on transformation. What he announced next would change everything about how American banking operated. "Effective immediately," Robert declared, his voice carrying throughout the facility, "Metropolitan Trust Bank is implementing Operation Fair Lending, the most comprehensive anti-discrimination initiative in banking history. Every single employee at every branch will participate in mandatory fair lending and bias awareness training within the next 48 hours. The scope of the transformation Robert was implementing was staggering. He wasn't just dealing with the immediate problem. He was overhauling the entire culture of his financial institution from the ground up. "Additionally," Robert continued, "we are deploying artificial intelligence-powered bias detection systems that will monitor every loan application, every customer interaction, and every lending decision for patterns of discrimination. These systems will flag disparities in treatment and automatically escalate potential civil rights violations to federal authorities."
The announcement sent a clear message that the old boys club mentality was over. Employees who had been comfortable with subtle discrimination now faced technological oversight that would catch biases they didn't even realize they had. But perhaps the most powerful part of Robert's transformation plan was what he announced next. "I am establishing the Sterling Community Investment Fund, a $200 million initiative designed to provide loans and financial services to communities that have been historically underserved by traditional banking. We will no longer tolerate a situation where zip code and demographics determine access to capital." The vision Robert was laying out wasn't just about fixing problems. It was about creating opportunities and building generational wealth for families who had been systematically excluded from financial advancement. He was turning his own painful experience into a catalyst for industry-wide change. "Furthermore," Robert said, his voice growing stronger with each announcement, "Metropolitan Trust Bank will partner with the Consumer Financial Protection Bureau, the National Association for the Advancement of Colored People, and other civil rights organizations to develop industry best practices for eliminating discriminatory lending. We will share our AI bias detection technology with any financial institution willing to commit to fair lending principles." The vision Robert was laying out wasn't just about fixing problems. It was about creating opportunities and building generational wealth for families who had been systematically excluded from financial advancement. He was turning his own painful experience into a catalyst for industry-wide change. "Furthermore, our Metropolitan Trust Bank will partner with the Consumer Financial Protection Bureau, the National Association for the Advancement of Colored People, and other civil rights organizations to develop industry best practices for eliminating discriminatory lending. We will share our AI bias detection technology with any financial institution willing to commit to fair lending principles." The transformation Robert was implementing went far beyond his own bank. He was using his influence and resources to create systemic change that would benefit countless families across the entire financial industry.
This branch, Robert said, gesturing around the banking hall, where just hours earlier he had been denied a loan and investigated for fraud, will become the flagship location for demonstrating how banking should work in America. Every employee will be retrained, every policy will be reviewed, and every system will be redesigned to ensure that every single customer receives equal treatment regardless of their race, appearance, or perceived economic status. But Robert saved his most important announcement for last. To the minority customers who have been experiencing discrimination at this institution, I want you to know that your experiences matter, your business is valued, and your financial dreams are valid. The people who made you feel unwelcome in your own community bank are gone, and they will be replaced by professionals who understand that our diversity strengthens our institution. The emotional impact of that statement was visible throughout the crowd. Customers who had been quietly enduring discriminatory treatment for months or years finally felt heard, finally felt protected, finally felt like they belonged in the financial institution that was supposed to serve their community. And to every employee who witnessed discrimination and said nothing, who participated in biased lending decisions, or who enabled this toxic culture through your silence, understand this: that era is over. You can either embrace our new standards of equality and respect, or find employment at institutions that still tolerate discrimination. The transformation was complete, comprehensive, and revolutionary. Robert had turned a moment of personal humiliation into a banking revolution that would serve as a model for American financial institutions for generations to come. The man they had called a fraud risk was about to transform an entire industry.
But the most incredible part of this story was still to come, because what Robert Sterling accomplished in the 2 years following that devastating day would prove that one moment of courage and principled leadership can create ripple effects that transform an entire financial system. 24 months later, the changes he implemented had spread far beyond his own banking empire, and the impact was nothing short of revolutionary for American finance. The transformation at Metropolitan Trust Bank was immediate and profound. Within a week of the discriminatory employee's termination, Robert had personally recruited and hired a completely new management team led by Dr. Keisha Washington, an African-American economist with 15 years of banking experience and a doctorate in financial policy. Keisha's first act as branch manager was to conduct individual meetings with every employee, explaining the new culture and making it crystal clear that any form of discrimination would result in immediate termination and federal reporting. The mandatory fair lending training that Robert had announced wasn't just a corporate compliance exercise. It was a comprehensive program developed in partnership with the Consumer Financial Protection Bureau, civil rights organizations, and behavioral psychology experts. Employees didn't just learn about federal lending laws. They participated in immersive simulations that helped them understand the real impact of bias on families seeking financial opportunity. The results were measurable and transformative. Within 6 months, loan approval rates for minority customers had increased by 43% while maintaining the same risk standards. Customer satisfaction scores reached the highest levels in the bank's history. Most significantly, the AI bias detection system had identified and corrected discriminatory patterns that human oversight had missed for years. But Robert's vision extended far beyond a single branch. The Sterling Community Investment Fund became the most successful minority lending initiative in banking history. The first recipients included entrepreneurs who had been systematically denied capital despite solid business plans and strong credit profiles. Under Robert's guidance, these businesses flourished, creating jobs and generating wealth in communities that had been redlined for generations. Among the fund's first beneficiaries was Maria Santos, a Latina small business owner who had been denied loans at multiple institutions despite having a successful catering business and perfect payment history. With Robert's investment, Maria expanded her operation into a chain of restaurants that now employs over 200 people and has become a cornerstone of economic development in her community.
The ripple effects of Robert's transformation extended throughout the entire banking industry. The AI bias detection technology he developed became known as the Sterling Standard, and it was so effective that competing banks began requesting access to the system. True to his commitment to industry-wide change, Robert made the technology available to any institution willing to commit to measurable fair lending improvements. Within 2 years, over 800 financial institutions across the United States had implemented some version of the Sterling Standard. The collective impact was staggering. Discriminatory lending patterns dropped by 59% in participating institutions, while minority home ownership and small business creation increased dramatically across the board. The most emotional moment came exactly 2 years after the original incident, when Robert returned to the Metropolitan Trust branch for an anniversary visit. As he walked through the same entrance where he had been denied a loan and investigated for fraud, he was greeted by a completely transformed institution.
The branch now served customers from every economic background with equal respect and professionalism. The walls displayed the bank's new mission statement: equal access, equal opportunity, equal respect, banking for all Americans. Most importantly, the atmosphere was one of genuine service rather than suspicious gatekeeping. During his visit, Robert was approached by Marcus Johnson, a young black father who had just been approved for his first home loan. "Mr. Sterling," Marcus said, his voice filled with emotion, "I want you to know that your story changed my family's future. 2 years ago, I was denied mortgages at 3 different banks, despite having good credit and stable income. Today, I'm buying my first house because this bank actually looked at my qualifications instead of my skin color." As Robert looked around the banking hall where he had once been humiliated and called a potential fraud, he saw something that made every moment of pain worthwhile. He saw an American financial institution that truly embodied American values: opportunity, equality, and the belief that success should be accessible to everyone willing to work for it. The legacy of that terrible day had become a testament to the power of transformational leadership and the possibility of real change. Customers who had once been denied basic financial services were now building generational wealth. Employees who had once participated in discrimination had become advocates for equality. The institution that had nearly destroyed itself through racism had become a beacon of hope for what American banking could achieve. The story that began with the words "risky borrower" had become proof that America's financial system could work for everyone. Sometimes the person you underestimate controls the very institution you're trying to exclude them from. And sometimes justice doesn't just punish the wrong, it transforms everything for the better. Robert Sterling had turned his moment of humiliation into a movement that changed an industry, inspired a nation, and proved that the American dream of financial opportunity truly belongs to everyone willing to pursue it with integrity and determination.